Roll Friday. It is March 8th. Let's get started for the Pulver Report. Say good morning to everybody. Happy Friday. All right. Welcome to the Pulver Report. Let's get started. First things first, we know there's risk in trading. Please and always use trade capital only. Anything we talk about in these sessions is for educational purposes only. You know the deal. All right. Let's get into the markets. So we have pre-market again up about $2 on the SPY, and this candle today, if we close green on the weekly time frame on the SPY, let me type this out in big, fat, bold letters. That is 17 of 19 bullish. If we close green on the week, 17 out of 19. That is one of the biggest, longest, most aggressive bull runs we have seen in a long time. Probably, I'm pretty sure since the 90s, as far as that many candles in a row consecutively, that type of surge as far as percentages go. We're talking 20, 25% on the S&P. On the Q, same type of thing. If we close, you can see it's a sliver of red today, but we're pushing up 446.90, another $1.50 higher. If we push green and close green today, that is 17 out of 19. The DIA, we're at 15 out of 18. The DIA has struggled a little bit. The Dow has struggled a little bit more as far as failing to break the highs. So pretty wild stuff. VIX still low, nothing crazy exciting happening. We had 2-day testimonies from Jerome Powell. We have CPI, PPI next week. We had non-farm today, 8:30 a.m. with CAD news. We had expected print was 198, came in 275. And unemployment rate was up 0.2%, and revision from last month was 353 down to 229. Oh, that's a big difference. Average hourly earnings revised down from 0.6 to 0.5, and the 0.2 expected move came in 0.1. So we have lower average hourly earnings, which is probably good for a cooling labor market. Unemployment rate up to 3.9, which is good. We still created 275,000 jobs, which was above expectation. So again, no news, good news, bad news, doesn't really matter. This market is very determined for not move. So it is what it is, and I'm not going to fight it. So I'm taking a little stab for the month of March to the downside with a 507.50 put. That's obviously upside down right now, but my 522. I do have a longer term. I'm doing like a bit of a. It's not a leap because I took the trade in March, but I'm essentially going out to the end of the year. That's a little bit too thick. I'm going out towards the end of the year with a 500 call. So if we're just going to see like this, stupid run to the upside, I don't know where we stop. I don't really care. I'm looking at a combination of things where if this is a low to a high, I do have a Fibonacci extension right there around 528. I do have even from this, I'm going to have to adjust the fib here. Actually, I will adjust this fib. This fib is just for trying to find a top. We find a top and have an expected pullback. Wherever that is, whenever that happens, okay, fine. I at least want to have some alignments of, Fibonacci levels, 236, 382, Gann retracement levels, 30%, 50%. And again, marking this all-time high from 2021 to see if that becomes a decent pullback point. But like we show here on the chart, we know that it's overbought. We know that I keep getting this indicator to print overbought conditions with divergence. Market's not stalling, market's not selling off. I'm going to float this out here for some option software. These are some gamma levels on the morning, pre-market around 517. I don't really see anything to the downside. I will be looking at some volume this morning coming in on the SPY, but I am curious. I almost took the trade yesterday. I wrote it. Might be on this chart somewhere. I wrote it down. I didn't take the trade. Let me see if I can go to the 15-minute. Text box didn't hold. Was it SPX or maybe it was SPX? Nope. All right. So it was SPY. Anyway, I was looking at a 515 put for $1.70. I didn't take the trade. I was looking to see, maybe I could sell it off these highs, but I'm just going to look at the same thing today. If we are opening up around 516, we hit this first gamma level around 517. We do have a few gaps. If we open up and leave a little bit of a gap here, I might look to fade this morning. I might look at this as well. There might be some heavy profit taking today. It could be a one-off stab where a zero DTE put for the day might work, might not. Maybe I should just wait for structure to take its place. But I do have something that I wanted to share. Equities on Demand students should be pretty happy about this. I finally found a trade that I like strategy wise. This is what I've been grinding on the last 3-4 weeks, trying to vet this thing out. And basically, this is where the market is. We can get paid pretty quickly as price goes one way or the other. Both of these peaks for profit fall within an expected move. It's easier to trade the SPX than it is SPY because you have just better decimals and better strikes as far as the in betweens. So we'll talk about this more today in Equities on Demand. But the nice thing is check this out. There are losses available in the trade. Things change obviously from the time you take this trade. This is essentially where the market is at, and so that's kind of your dead zone. Couple things with this. That is the dead zone. There's about a 70% probability, just based on a one standard deviation move, or even within that expected daily trading range, daily to weekly trading range. This SPX is going to move about 100 points a week. These moves are about 50 points apart. So this is a plus 50 points move, give or take, and then 50 points here as well. So from current price, I'm going about 50 points up, 50 points down, and I'm doing it's essentially like a quadruple double diagonal, which I know sounds ridiculous, but that's essentially what it is. So prices here, if it ramps up, we get paid on the bullish side. If it ramps down, we get paid on the put side. If it goes gaps and goes ridiculously low or ridiculously high, we still walk away with profit on one side or the other as well, depending on how this is priced out. So there are ways we can make this where if it overshoots our peak profit levels, then we can still generate profit. So there is risk on the trade. These aren't cheap. This debit's going to be somewhere between like $5 and $7. But the probability of profit for if I have to invest $7 to make one, $7 to make two or three, those are the type of gains we can make. And even better is this level would be you're clearing, let's say, $2 to $3 out of a $7 debit. These gains you're clearing $4, $5, $6 out of a $7 debit. So the returns are pretty solid. It was a complicated trade to learn because there's so many moving parts to it. It's essentially 8 positions. So it's a group of 4 over here, a group of 4 over here, and you manage it together collectively as a net position. So this is one I'm going to be trading this a little bit more on the SPX, and I'm going to be asking for lower fees because it is definitely going to be a fee heavy trade when I'm taking four legs, that adds up. Okay. All right. Good morning, traders. Let me give a shout out to everybody that's popping in here. LG in the house. What's up? First is LG. FK next. Chris, good morning. Angela, good morning. Jose, good morning. Donna, good morning. Herschel, nice to see you, sir. David, good morning. Jan and Ann. Okay, Willard, good morning. Nice to see everybody. Okay, good stuff. This is the same trade. I built this one out in TD Ameritrade. And this is a trade that I built out going into this week's trade. So I'm going on the bullish side. If we hit 520, which would be around 5,200 on the SPX, I've got this trade built out as well. So pretty interested in this. Market's going to open in about 20 minutes. I'm showing pre-market around 516.50, just shy of $2 to the upside. And your SPY, your Qs, your DIA, even so the DIA, like I said, daily time struggling a little bit. I'm going to put a chart alarm up here at all-time highs and see if we can poke those levels. So this would be ATH, all-time highs, not there yet. Take a look at the dollar. Okie dokie. Well, we have, I don't know why I'm sitting here wondering, like, is my dollar direction correct? It broke this low, and non-farm today, I don't know. I'm literally gonna I'm gonna drag these dollar crosses that I took into last or this week. So I got stopped out in the dollar yen. The nice thing is Hypertrend cleaned up this week. I'll check the results right here in a moment for some robot trading this week. Hypertrend as of yesterday was up about 1,800 pips since deployment, which I think maybe was 2 weeks ago. So I'm glad I did a neutral position where it was buy and sell on dollar crosses because clearly the robot was taking some dollar weakness trades and that trend worked out pretty nicely. I personally was taking dollar strength. I didn't have stop losses in. I took really small trade sizes. I did get stopped out on the dollar yen, but we're below 103.10, which 103.10 is yeah. I mean, okay, hear me out. Is this a left tip, right tip? And the reason I ask is, here we are, March 8th, non-farm payroll. This structure, I did draw this trend line right there. If there's any way, and I could be totally wrong here, if there's any way that this is, just testing and running stops below this level only to give us a candle that reverses next week. Remember, we have US data, once again, CPI, PPI data. If this dollar gets back up in this yellow box, I am still looking at a long position on the dollar crosses. So executive decision for me. I'm going to let the robots continue to trade how they trade, follow the trends, trade what they see. I'm still going to take a stab with my smaller trade sizes on the dollar. One position you can't talk me out of right now is dollar Swiss long. Dollar Swiss long, I'm going to stay there. Aussie dollar, I looked at it. We have a potential crown pattern for right tip to form. New Zealand dollar, same thing. Okay, euro dollar. Actually, pound dollar is probably the one that I might end up liking because if we break above the 2,800 level, I think there's room to get to 1.30. So that might be the only trade that I would consider getting into as far as reversing positions. I'm going to get the other ones and give them a chance to maybe set up the right tip of a crown. William, good question. Yeah, we can ask. You can always ask. TD Ameritrade, if you ask, I'm pretty sure that they might lower your commissions if you're an option trader, especially. If you're an option trader, you can get your commissions lowered by maybe 10%, maybe 20%. But anything helps. I mean, I'm going to be taking thousands of trades, so it certainly helps. Okay. Anyway, dollar. Let's go. Let's go dollar. Dollar crosses really quickly. Aussie dollar. So this is the potential pattern I was considering, right? Overall, there's still some indecision here. I don't necessarily. This is what I don't think. I don't think the Aussie dollar is making this run. I don't think the Aussie dollar is doing that. I don't think it's doing that. But if I zoom out a little bit, I don't want to be naive here. Let's look at the chart. So, I mean, that's connecting highs. That's probably a more accurate depiction of where we're at for this bigger channel. We have this low, we have this high. Um, if I'm really going to be convinced on dollar weakness and this Aussie dollar takes off, this is the pattern. Left shoulder, head to neckline, right shoulder. If that happens, then sure, I will get out of this trade and we're going, much, much weaker on the dollar. Much weaker on the dollar. Is that going to happen? I don't know. If I knew that, then we'd be all in, but I don't know that. So that's really the room. If I'm going to say the dollar weakness is really here and it's really confirming, then we'd have to be outside of this. Aussie'd have to be up here outside of this channel. Then we're talking about a real possibility of the dollar getting super weak and or Aussie getting extremely strong for retest of this, 8,000 handle. Why, I mean, why would the dollar get so weak with one of the strongest interest rates in the country or the world right now? I don't know. Um, I think it's just because there's so much risk appetite that it's like buy other assets, buy Bitcoin, buy gold, get out of the dollar, put it elsewhere. I mean, that's probably why. But it is interesting that, why would it flow into the Aussie with a weaker, Aussie's more risk on. I get it. Euro is an alternative, but ECB is in a tighter position where they're likely going to be cutting rates sooner than the Fed or cutting rates right in tandem with the Fed. So this is why I don't know, man. I'm just not convinced. I'm not convinced that the dollar is going to get super weak. If we go back to the DXY and zoom out for a moment, let's zoom out on the DXY. Weakness, how weak, right? How weak is the dollar going to get? If we're down at this level, which has been a strong support number right around 100, I don't see the dollar going too much lower than that without the same thing here. Dollar gets weaker, 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 and then pivots, and then off we go. I can see the same type of thing happening where this is a range trade. This is a range based year. And I don't know. I'm obviously racking my brain here. It's like, I just don't see the longer term, like weaker dollar. So a little sell off here and there makes sense. But I suspect that currencies are still going to be somewhat range bound. And at least I will say this, at least now versus what we had in the last couple of weeks, where this was, a frozen index, broke out, looked for some follow through, didn't follow through, didn't follow through. It was 4 weeks of garbage trading, and then finally we're getting some movement. So that's not a bad thing, and I'll certainly tip my cap to at least having some trends. And the good thing is a robot picked it up. So let me see how Hypertrend is doing. So today, Hypertrend captured another 319 pips. We're at 2126 for the week. Love it. So a little trend robot that can 2126 for the week. That makes my life a lot easier. And good old Pockets Pattern Pro doing some counter trend trading up 169. And Perfect Storm, the original, is up 86. And Perfect Storm Pro is up 368. Not too shabby. 27.49 on the week for some robot trading. That does not make me unhappy whatsoever. Is BRICS having an impact? I mean, I haven't read about it. I've heard nothing but bad things about being invested in China. Obviously BRICS is I don't think it's BRICS necessarily, but certainly a flight to gold is affecting the dollar. Oil prices have been pushing higher. That affects the dollar. Bitcoin, if I don't think Bitcoin is being looked at as the alternative. It's more of like a speculation run right now. But those are all anti-dollar trades, right? Dollar weakness flows into those instruments. That's a pretty typical correlation. So I wouldn't pinpoint that as BRICS right now. I'm going to go auto trading profits here and track that in the doc for this year's trading and add in the old hyper trend. So Perfect Storm was 86. Perfect Storm Pro was 368. And Pockets Pattern Pro was 169. And Hypertrend was 2126 for a grand total of 27.49 this week. I'll take it. So off to the races for a few months of trading this year. We're up 6,000 pips for the Flex Trading Room. Manual trading plus some auto trading. Not unhappy by that at all. So good stuff on the dollar, good stuff on the robots. And my dollar pairs, I traded basically the dollar basket at a micro lot. So I'm just chilling out. I just want to take a stab at it. I'm still going to hold. Here it is in the Flex stock. I'm still going to hold. Okay, so there's my dollar basket trade. Stopped out on the dollar yen. I'm holding long on dollar Swiss. That doesn't change at all. Dollar CAD, there is no trade. The other ones I'm willing to kind of hang out and see what is up. But I will say that pound dollar might be the one that I'm considering a reversal on. Dang it. It broke the highs. It's not what I wanted. Fudge. All right. This one I'm gonna flip. All right, let me stop out on my pound dollar. Give me a moment here. I'm gonna reverse pound dollar and try to go after 1.30. Logging in on the phone. Okay. All right. So here's what I'm going to do. We've got 4 or 5 days in a row on the pound. I'm going to look for this. If I go pound breakout, 1.30, we're trading at 28.73. So I'm going to throw in a small trade now, throw in a small market order, and take another trade right in here, and then stop out below this low. So, part of me is like, well, I should tighten up the stop loss. But if we have a a retest in the yellow zone and then bounce back up. I think we can get to 130 plus. This indecision with a measured move should put us up to around 1.30. So I'm going to take a stab at the pound US dollar now. And that would be an entry order at market 28.72. Trades, Forex, pound dollar. Okay, so I'm buying pound dollar. Whoops, units. Take profit price, I'm happy with 3,000. Stop loss price is lower than that. Stop loss price I'm putting around 26. I'll go 25.90. I might stop out of that earlier if it looks invalidated, but 25.90 for now. So entry one, 28.74, 3,000. So I'm going after 125 pips of profit. Submit. And then a second order, if we pulled back into yellow, that'd be around 27.25. Pound dollar buy. This is a market or a limit order. Okay. 27. That is 27.11. I'll go 27.20. Take profit 1.30. Stop loss. Excuse me. Stop loss around 25.90. 1.2590. Okay. That one's a little bit better on the reward to risk. Trades are in. Pound dollar alike. I'm going to stick that one out. So I'm going to take this and update the doc really quickly. Pound dollar is stopped. Okay, and I'm going to add in the pound dollar right now to the doc. Pound dollar buy. Today is the 8th. 1.2874 was my fill. 1.27 27.20 is my second order. My stop loss is 1.2590, going after 1.3000. So active pound dollar breakout, targeting measured move. And that is going along with dollar weakness. Okay. So updated the flex stock right there for the trading room, 28.74, 27.20 stop loss below, going after 3,000. If we get to 3,000 before we get both entries filled, obviously I'm going to cancel the second entry and take the profit on the first one. Okay. All right. Good for that. Pound New Zealand, we'll take a look at that, sure. Let's go through some currency pairs. Directionally, Aussie CAD, we're bullish on that in the trading room. It's going great. Just keep riding that thing higher, looking at some, should have some master flex in here. Give me a moment. Let me bring up my indicators. We're 4 minutes away from opening bell. I'll keep an eye on the gap levels and the gamma levels to the upside. Let me go to workspace here. The dollar yen, we got stopped out over here. Got stopped out early on, so that one's fine. We are short on the Swiss yen. I did want to take a look at currency strength this morning. So non-farm hits, dollar gets weaker, Japanese yen stronger. That's helping our Swiss yen. We are short on the Swiss yen right now, and that's going our way. We were up 100 pips yesterday, and there should be some more to that. New Zealand is right there in the middle, along with the Aussie. Pound is slightly up as well. So, all right, let's take a look. Aussie CAD. Aussie Swiss I'm bullish on. I'm looking to add on any dips and pullbacks. If we get a pullback into the ribbons, get a crossover, look for some support, stay bullish on this Master Flex indicator set. I like this trade a lot. Aussie CAD, we're already bullish as well. Any dips, any pullbacks. We took a buy trade in here, bought at 88.75, stop loss below the U-turn. Currently, that trades up about 70 pips. Aussie Swiss. We talked about buying it in here. If you want to follow Master Flex, look for the trendline break. You're buying it here. Stop loss below the fractals and go after some fresh highs. Bigger time frame, we're going after 6,000. If you want to ride this thing out for a bigger swing. But I like long and we're long. Aussie Yen. Not a convincing move. I'm holding off on this one right now. There might be another leg lower. Okay, if you're following this structure, if there's another leg lower, you can look for a break and a flag. But I would be very protective of at least a stop loss into break even or better, because if we bounce hard at that trend line break, we don't get our sell trade that we really want. The bigger sell trade is that it's got to break that structure. If it just flags, we go high to low, pause, and then push lower. If it bounces right there, then look for that to be a hard bounce off like 96.50. Aussie dollar. This is why I had the right tip. I'm just gonna chill for right now on the dollar stuff. So I'm not closing myself out of the dollar index yet. Pound dollar I did. That was the invalidation. CAD Swiss. This one hasn't really had the big breakout like the Aussie Swiss has. But we're long Aussie Swiss and we're still long on CAD Swiss. I put a non-FIFO buy in yesterday, right here, stop loss below. I'm still holding positions all long. So I'm still going to hold long on CAD Swiss. And if you're interested, this one hasn't broken out yet. So get a breakout here. Stop loss goes, below this little fractal. You could draw a trend line out here, stay in the buy zone. CAD Yen. CAD Yen, maybe a topping pattern. Okay, maybe a topping pattern. If we bounce back up here, we could just sell the neckline if that's correct. I would rather sell the neckline than sell the right shoulder in case I'm wrong. But otherwise, I've got no trade in the CAD yen at this time. Swiss yen, we are short. We shorted the Swiss yen at 169, and we're trading at 167. So we are up around about 120 pips, about 120 pips right now. Okay, is that right? Yeah, about 120 pips. So just gonna let this run. But we just had a nice clean breakout, took the trade, and if I see another, hopefully we don't really see much more of a bear flag, maybe. But if there's a pullback and then sell off, if we make a fresh low, I'll put that stop loss break even or better, or just above this U-turn. And I'm going after this. I'm going after at least channel lows or this low. Pretty good reward to risk on that trade. We opened up pretty much 515. Looking at the 5-minute chart really quickly. Volume swinging out of the gates to the upside. Contract sizes are pretty light, even though it's a month, or no, next week it's a monthly expiration. There's gonna be some big expirations next week with CPI, PPI data. We have monthly and quarterly expirations. Yep, I'll talk about that before we're done. Good question. I'm just gonna chill on this for right now. Real time. It's 83-0 call option volume versus put option. So the market's not interested in fading yet. At least I don't see it, unless we just get a fade off of like a 517. So the gap from yesterday would be around 512.50. So if we can possibly fade up to like 517, 518. And again, really quickly, I'm going to float this down and go to the bigger time frame. Check this out. On the weekly time frame, this is another reason that I am extremely interested in looking for at least a correction. At this high, okay, at this high, at this low, at this high, at this low, these are major turning points for the market. Breaking above this high, projecting this massive resistance window. Now, I get it. This window is from 515 all the way to 550. The odds of getting to 550 and having, like I said, if this week holds green, that's 17 out of 19 freaking weeks green. That's insane. It really is insane. And I get it that the pain trade is, it's everyone's calling for everyone's expecting to be a pullback, but it's like, okay, man, it's one thing for everyone calling for a recession. It's one thing for everyone to be, my head's in the sand and I'm sitting in a money market instrument at 5% because I don't want to be invested with risk. Now we're talking about smart, intelligent traders that are pragmatic and realistic, looking at the markets, and we're just staring at like something that's pretty irrational. Now I get it. Markets stay irrational longer than traders remain solvent. I get it. But technically speaking, this is now into ridiculous territory. I'm not saying it's a bubble. I'm just saying it's ridiculous territory. And I think a correction is very, very near. So I want to see, if and when we break, go down to the smaller time frames, looking for structure break, looking for price action confirmation, and then that's my pullback zone. Okay. So at any time, if we start to hesitate, if we start to confirm, I'm at least looking for a pullback. Now, I was hoping that I timed that pretty well for the month of March, simply because we had October, November, or actually late October, November, December, January, February, and now it's into March. It's like the market knows nothing but up. And okay, fine. But how long does it go? I don't know. But we're gonna find out. And if it starts to fade, what's the number? Is 520 some arbitrary resistance that the market decides to turn at? I don't know. I mean, that's 530 right there. It could, right? We can get up to 520, 525 start to turn, but there's enough data, three things. CPI, PPI, Fed in the next 2 weeks. Is that enough? Earnings season's done, right? We have 98% of earnings already in the markets. Um, year over year, I think this is as good of an earnings season we've had since like Q4 of 2021. So anyway, I'm not here to fight it. I'm taking both directions. This is why I've been gutting these strategies out, where this is the type of trade that I want to take. If I'm right on the downside, I want to get paid right here. If I'm right on the bullish side, we keep melting up, I want to get paid right here. If it goes too far left or right, I want to get paid right there. So that's my risk. There is risk on this trade, but I still like it. So that's the strategy that I'm looking to deploy. All right, let me get that back there and go back to the 5-minute chart. Let's continue on some Forex trades. So right out of the gates, we're up a little bit on the day, pushing to some fresh all-time highs. We're short on the Swiss yen, Euro Aussie. We took our profit on the Euro Aussie, and let's see how nasty this pullback is. This could be a range trade. Just be careful on this one. We've gone straight down very quickly. I could be looking at a potential support zone here. So if this holds, we could have some indecision at the lows and turn right back to the green side and head higher. But be careful. Okay. If it starts to break lower, then we're just treating this as, if it breaks here, this is resistance. Now offer some continuation to the downside. I'm not sure. So it's a 50-50 trade. I don't like this one as much. Okay. Euro Swiss. Euro Swiss, I'm still bullish. Anything that pulls back in the ribbons, I'm adding. I had a 25-minute video that I released this week for my portfolio builder. I've got this chart surrounded, all the Swiss pairs that I'm trading surrounded with trades to the upside and downside. Euro pound still in the yellow box. Ooh, starting to possibly get a breakout to the downside. Possibly. This one might be a chance we take a stab at this to the downside. I would have to look left. How much further left? Let's go to a higher time frame. This is a big support level to break. If the euro pound breaks out of here, then it opens up opens up space to run to like 83.50. It's not a lot of pips. It's about 160 pips, but that is still open space. So we have survived in here for the last little bit, just trading some noise. But if we get a clean breakout, the pound basket to me looks pretty promising. I am long pound Aussie. I'm long pound New Zealand. I'm long pound dollar now. I think euro pound would also align, where if we get that trading confirmation, I like it. So I'll be watching that one closely. Euro yen. Euro yen back to the 4-hour chart. I'm short on Swiss yen. The euro yen looks ish confirmation wise. So take out the low. I don't love this right now. I'd say I want to get like another push lower, maybe a flag. I want some open space and wide open confirmation. Don't have it yet, but keep an eye on it. You're in New Zealand. You're in New Zealand. This one hasn't really pulled back as much. I took a buy position this week. We are getting a pullback. We got filled. Nope, we didn't get filled yet. So I tried to fill this pocket on a second entry. So we're close to getting second entries filled. Stop losses below the swing low at 75.25. So I'm gonna hold tight on the euro New Zealand for right now. Pound New Zealand. Somebody asked that earlier. Akeem's asking about pound New Zealand. I'm still long on that one. I'm gonna go euro dollar. Euro dollar. If this is a crown tip, right? This could be a right tip. If the dollar turns, I'm still looking to hold that sell trade. I flipped around. I'm going to hold for right now. But pound dollar, I switched to go long. Euro dollar, I'm still going to hold short just in case this is this low, left tip, center tip, right tip. If we form that right tip and the dollar starts to get stronger all of a sudden, this could be, the dollar gets weak in March and then April, May becomes possibly a pre-summer push on the dollar trend. Not sure. I'll let the robot do its thing, protect some profits for me. Okay. So keep an eye on that one. Pound crosses. I think the flash crashes in the past, child's play to what we might be getting ready to see. Long stop, gapped across. I don't know. I don't think flash crashes are ever child's play. Flash crashes are real deal, man. I don't know. Nobody knows what we're going to see. I mean, the Fed right now has navigated a soft landing. Kudos to them until it's not, right? I mean, that's the thing is like, is the Fed being celebrated right now for like navigating this? Yes, no, maybe. Are debt's risen by I don't know how many trillions of dollars since we lifted and suspended the debt ceiling. The debt's going to be a real problem. I think whatever happens in 2025, whoever the president is, I don't think there's any escape for something very, very bad happening. Economically, like this reality check is going to happen in some nasty way. So maybe this year is all about AI and semiconductors. They can do no wrong and just enjoy the run, right? Enjoy the run, enjoy the rally, make money while you can, and then make sure that your butt's protected because you're going to have to buckle up for some crazy stuff in the next couple of years. So 2025 could be that year, right? You're passing fiscal stimulus, monetary accommodation, you're passing all these things onto current or new administration with like complete, I don't know, complete like fiction and fabrication and manipulation. And I don't know. It's now maybe isn't the time, but I'm not going to sit here and join the bear camp and just be, like pounding my fist and being proven wrong every week. So I trade it, I get paid, and we don't worry about it. But flash crashes are never child's play, ever. 2022 wasn't child's play. 2020 wasn't child's play. It's like it's just the market. I mean, the last 5 years, the market's been crazy. I'm assured that the next 5 years going forward, we're going to see some more crazy stuff. So it's either you embrace this challenge and sign up for it, and you trade it to the best of your ability, or you think like it can't be tamed. It's like there's too much money to be made in the markets. And crazy or not, I mean, the good thing is there's movement. I guess the worst case would be nothing is happening. That'd be more boring than anything else. I mean, this might be frustrating to be like, man, 17 out of 19 weeks bullish. That's crazy. Right. But I'm still making money, you know? So my portfolio is up 3+% this month and the bigger portfolio. That's great. Making some pips this week. That's great. I just keep grinding. So that's that. All right, pound pairs. I saw pound New Zealand request. I'm still in pound Aussie long. I'm going to hold pound cat. I haven't touched the trade yet. We're getting close to this potential bullish breakout. Okay, I don't love that trade, but I will take a stab at it if we get a clean breakout. If we get a clean breakout here, I'll look for a buy trade. But I was looking for the bears to see if they broke the trend line. I'm not super convinced pound cat is going there yet. Plus, we have some resistance to the upside. Pound Swiss, I'm definitely long. Pound Swiss, we're making some higher highs. If you took a buy trade with me at 111.25, this would have been 1 or 2 weeks ago. That's up 140 pips right now. And I'm still looking to get a pullback buy. We might not see much of it. I think this trade is going to get filled. I've got some stacked buy stop orders that are going to get filled probably sooner than later. I've got a 12.75 and a 13.25. If that heads up to 15.50, I'm going to be in some nice fat profit on that pound Swiss. But I'm trying to go to 1.20. Bigger picture. Pound yen, no trade. Pound New Zealand. We are getting a pullback, but I still like this trade here. I think it's more range bound. So we turn nicely off this level. That is where my stop is below this U-turn. Okay. So we took a small trade around this first little pullback. Second trade would be a fill of this pocket. So trade one, trade two, stop loss below. I'm looking to see if it just stalls here at the backside of this trend line, and then pound New Zealand heads back up to the highs or heads back up to swing higher. So I like that trade right there. So I'm still holding pound New Zealand long for that one. It's dangerous to be long right now. Is it? How does stops not protect you? How's that possible? How can you say that? If you're long with stop loss, how does that not protect you? Monday through Friday, brokers don't honor stop losses. I mean, if anything, it's like if you're long, stop losses are great. Or if I'm long, like I'm long the markets, I'm long with options. I have defined risk in all my trades. So I'm not worried about it, right? The most I can risk is my debit if I'm doing that type of trade or a credit spread. Most I can risk is what my spread is minus what I collected. So I mean, as long as you're trading liquid markets, stop losses matter, prices matter. I think there's more reward to the downside. Look, here's the reality. You go back to the old saying, bulls climb stairs, right? Bulls climb stairs. That's what we're doing right now. These bulls are marching higher step by step by step. The bulls are essentially on a smooth escalator. It is smooth sailing, 17 of 19 weeks. This is one of the greatest runs we've seen since the 90s. Problem with that is bears jump out of windows. So when we do have a correction, and we will, it could be and probably will be very violent. And we could wipe out, a ton of gains really quickly, right? Your Nvidias, your semiconductors, these, 60, 70, 80, 100% gains for the year, these Russell, the Russell top 25 going up 360% for the year, those could all be eroded very quickly in some violent profit taking or policy shift or something. I mean, in the back of my mind, there's still like, what am I missing? Yeah, that's the hardest part is everyone builds this narrative around like, oh, I need to be prepared for a black swan event. Who the hell knows what it's going to be? Did anybody know COVID was going to be the reason the market crashed in 2020? No. I was bearish going into the year because it was overextended. Same thing here, right? Is this, we're everything's great and we're have this smooth, silky escalator to the upside, and then we have a war with China, China-Taiwan invasion? I don't know. Could that be it? Is it that like in our face? I don't know. But if these bulls keep climbing the escalator, man, I'm not going to fight it. So take the run, define your risk, manage your money. When the markets move really fast, I've seen Scott. Yeah, well, I don't know. I mean, I don't know what you're trading, Thumper. Like, what are you trading? If you're trading futures, yeah, maybe. So trade futures and trade options. So your risk is always defined. That makes life a lot easier. My thoughts, at least. I'm not a future scalper. So I trade lots of options. All right, let's go a little bit longer here. Pound dollar, I reverse positions. I'm looking to see if we get a breakout. So if we go break, retest, go, I'm still going after 1.30. If we're going, break, flag, and go, same thing. A pause or pullback is fine. Still going to 3,000. Pound Swiss, I'm long. Pound dollar, I'm New Zealand cat, I'm long. Fine. New Zealand Swiss, I'm long. Good. New Zealand yen, no trade. No trade. Trend line support sitting right there. We could have this. If this is actually a pretty clean trade, if we go down here and turn green, that could be a very tight stop loss and a nice little trade to see if we poke back up to those highs. I don't think the carry trade is unwinding yet. I've said that the last couple of weeks. I don't think now is when the Japanese yen sustains its strength and the carry trade unwinds. Monetary policy of the Fed isn't going to be until May or June if they cut rates. I mean, they're pushing back like that narrative is like, we don't need to cut rates. Inflation data, blah blah blah. We won't cut rates. They are literally saying like they're walking the line very tightly. We want restrictive policy. We're watching inflation numbers. We don't think it's appropriate yet. Well, in 3 months they can make it appropriate. If something breaks and the market panics, they're going to start cutting rates anyway. I mean, the Fed is reactive in that standpoint. So I think that the Fed's gotten a lot of credit for navigating whatever you want to call this, but we're clearly in some type of weird, irrational escalator to the moon type environment where something's going to happen and it's going to be forcing the Fed's hand to be reactive, and then things are going to get really chaotic, most likely. All right, New Zealand dollar. I mean, this one has some potential, but if this is resistance right here, that turns and goes back down, that could just be a range trade. If I'm wrong, I might reverse that position on the Kiwi. I'm not sure yet. Haven't made up my mind, but I'll let my robot take some trades. Dollar CAD, we took profit at the highs on this one, so no trade. Dollar Swiss, pullback's totally fine. I could care less. This one, pull back all you want. Previous resistance here, look for a bounce. If it bounces, turns green, I'll go long again. I'm only holding Dollar Swiss long. Dollar Yen, this one we've got stopped out on, which I'm fine with. I don't care about this trade. This isn't enough. This also isn't enough unless we take out this low, possibly a crown or a head and shoulders or crown pattern, possibly. I still don't even trust this dollar yen. I could see this thing coming down here, tagging this low and then coming all the way back up to the highs again. So I don't trust the dollar yen at all. Could you look at Cube? Sure. Let me go back to this chart. I'm going to look at Lennar Homes. Herschel was asking about this one. We're at 165. Earnings on Lennar coming out next week. Looks like aftermarket on Wednesday. Crazy run for these home builders. Also, same type of rally. So Lennar is up to, I mean, it's up 60% since that October rally. If I go to the daily time frame, I mean, we're certainly stretching overbought conditions. We go to the weekly chart, if that's also overbought, which it is. I don't know the exact top here. Obviously, I don't know the exact top, but we are stretching into some overbought conditions that I can see, that I can easily see. So if I go to my chart here, bring up my little subgraphs. I mean, this is the daily time frame. If we get back into, and it's not that far away, we have a yearly pivot. We've got some ribbon indicators that haven't really been touched in a while. If we get into overbought territory again, I'm going to be looking for another sign of divergence and seeing if a correction is due. So I don't know how much more upside, but I mean this currency or this stock shouldn't be like a crazy mover every single week. I mean the ATR is about $8, so I don't know. I mean 180 to 200. I'd be surprised if we can stretch over 200 without having a pullback first. Just looking at that one. So Herschel, that's that one. And then in our workshop tomorrow, if you want to talk more about it, we can. And then Cube, take a look at this one. Sure, Cube Smart 45.41. Is it a wedge break or more of a trend line break? That's a pretty good looking trade if you ask me. I think that structure is pretty solid. I would want to see, does this company make money? So let me type this into my snowflake analysis and see what the dealio is. So Cube Smart, okay, has a high level of debt, but pays reliable dividend at 4.58%. Earnings grew by 41% last year, trading below estimates and analyst values about 40%. So I do like this pattern. I love this pattern, actually. This is a nice, kind of encouraging, promising head and shoulders. On the right side of that trend line break, I think I actually like this trade enough to take a credit spread if there's options on it. So what do we have here? Real estate investment trust. Ugh. Self-managed, self-administered real estate investment trust operates Cube Smart subsidiaries. Is this a storage unit thing? Yep, self-storage properties. Okay. Well, since I have some storage out there in Park City area, let me see. Let me see what this looks like option-wise. Go to Cube. Let's see. Ivy rank 42. We do have earnings coming. Was it next week or was that Lennar? We already had earnings, I think. Hopefully, it's not coming up soon. We already had earnings. So we had solid earnings. It does make money. Reliable dividends always good. Okay, I'm gonna see if I can do like an out of money bull put spread if the options are decent. So I could go out to April right before options on or earnings on the 25th, and the spreads are garbage. I will say that. But if I want to do like a 40 by 35, I could grab 70 cents out of that. That's better than 10%. So it's not ideal, but probability is pretty high. 87% probability of profit. I think we stay where we are. And beta wise in this stock, let me see. Go to FinViz. Let me check the beta on this stock. I want to see how correlated it is to the S&P. So beta, it's at 0.71. So it's slightly undercorrelated, which is good. So if the turd hits the fan in the S&P, this won't be as affected. I like the trade. $40 is back down here. Yeah, I'll take the trade. I like it, man. So I'm going to get in. I'm doing a 40 by 35, take 70 cents. I'll do a couple contracts. I'm in. Good find. Yeah, I like it. 30 by 45 or a 40 by 35 bull put spread. So I'm going to go into here. The spread is quite wide. I mean, 165, 70 cents to 25 cents. Um, I will take no less than probably 50 to 60, 55 to 60 cents ideally is the lowest I'll go. Hopefully I can get filled here at, hopefully I get filled at 70 cents. So let me send this out, see if this will fill. Cube, what? I've seen this a couple times. Cube is currently set to closing only. Only closing trades may be submitted. What the hell does that mean? I saw this yesterday on a ticker as well. I think it's just it might just be an illiquid stock. I can't trade the options the way I want. So fudge, man. Well, that's annoying. So anyway, I mean, I guess if I own the stock, that's fine, but that's stupid. Closing only. I don't get it. I'm seeing that. I'm seeing that like oddly more than I want to. So I don't know what that really means, but I'm gonna email. I'm gonna email support on that because I don't see that a lot, but I'm getting frustrated. That's popped up a handful of times the last week that I've been scouring trying to find some trades. So let me take a screenshot of that and see if they can give me some info on why. Box that in. All right. I think we've gone plenty of time for today. Any other thoughts and questions? We did A to Z on currencies. We checked out the indexes. The melt up keeps happening. Non-farm was possibly a good read today. It's like we had better than expected jobs. We had a higher unemployment rate, and we had a lower average hourly earnings. So maybe that falls in line with like better numbers as far as what the Fed wants to see for labor markets, which means they don't have to cut rates. It's kind of what it means. How the market's melting up on top of this, I don't know. I will say this though, when rate cuts happen, it's usually not a good thing for the markets. Usually isn't. So, anywho, we'll leave it at that. Any other questions? Any other thoughts? We good for today? If you're in my Equities on Demand class, let's jump into the trading room in a few minutes. Oh yeah, really quickly, I'll make a mention of that. Thanks for reminding me. So strategy showcase. If you're still here, quickly, if you're watching on YouTube or whatever you're watching on Facebook, Twitter, whatever, I appreciate the likes and thumbs up. It helps support the channel. Um, this is what I talked about this week. I posted this in my Discord channel. I'm going to be doing a strategy showcase. It's going to be a combination. I'm trying to figure out what the best way to do like a live session is. If people want to join the live session, that's fine. But I'm going to make these videos on demand. So lesson videos, inexpensive. Like if you want to rent them, like $10, $15. If you want to buy them, $27. And it'll be a very like specific, 30 to 60-minute video on something. Technical analysis 101, advanced technical analysis, price patterns, inefficiencies, pockets, you know, trading, day trading, scalping in Forex, swing trading, trading positions, build all the stuff. So I have 20 years plus experience in the markets. I got tons of this content that's out there. I'm trying to put that's the whole reason I built Discord is I want to have content in one place. So I will be building these videos out. If I can find a way to tie these into live sessions, I'm happy to have everyone join me live as well. But I at least have a place to put these. So I'm building these in an on-demand library, and I will probably start doing a couple a week. That is the plan. And once they're available, I'll just share it in Discord. It'll be in my education portal for Discord where I have all my other stuff from market traders. So all my trading rooms, all my robots, trial prices. I do have this complete series from Survival Trader that is patterns, market structure, price action, stuff like that. My on-demand video series for the strategy showcase will be the same type of thing, but in all different assets. I'll cover Forex, I'll cover stocks, I'll cover options, I'll cover crypto, and what I'm doing best practices wise and what I've done to be pretty successful in those assets. So I want to make them accessible. I want to make them affordable, and I hope they help. And obviously, with the community growing, I just want to make sure that traders like what they get. Okay, so that is that. Okie dokie. I'll let you go for today, and let's jump into the Equities on Demand trading room here in 4 minutes. And thanks for being here. I'll be back on Monday for a YouTube session, and let's grind out from. So, Equities on Demand students, get ready. We're gonna expand our minds into some quadruple double diagonals today. Okay. All right. I'll see you in a few minutes. Thanks, everybody. Take care. Have a good weekend. See you later.